What is going on? Welcome back to Fanatic Journey. So today I want to talk to you about Rivian. I want to go over some of the current data points, what's been coming out associated to the company, and whether right now is a good time to buy or not. Before I get into any of that, make sure to hit that thumbs up. And with that said, let's get right to it. So right now it is down 0.79%. About 10-15 minutes left in the trading day. There was a new 52 weekend all-time low created at 10.01. So crazy stuff for that. But despite the sell-off that's happening, 31.6 million shares being traded, 49.6 is the average. So clearly big money is not buying the dip. And you can kind of tell that based on here as well. So these are some of the transactions that have occurred on the secondary market above $100,000. So in comparison to the last several trading days, just night and day difference. So it is very discouraging to see, despite Rivian's cash that they do have being equivalently more than the current share price, just big money does not seem to care. They're more focused on how much Rivian is burning through. They're also not really caring about their recent accomplishments, as what RJ just recently tweeted. But it's just one of those weird scenarios. And normally you do get some manipulation that does happen behind the scenes. And it is in one way or another linked to analysts. But analysts oddly have always really liked Rivian. They do see them as one of the biggest contenders against Tesla. So as of right now, there was one done yesterday, $13 price target, Morgan Stanley, Adam Jonas. And on a side note, Adam Jonas has been very bearish on the broader market. So as of late, recently downgraded Lucid and as well Tesla, but he has grown to really love Rivian, as has a lot of other ones as well. So you do have Garrett with CFRA, who has a 64% success rating, did give a sell and an $8 price target. And even aside from that, Ben with Robert Bard, Ben, who has a 44% success rating, gave a $23 price target. So a lot of ratings done about 3 days ago. A lot of them are linked associated to their unveiling of Q1 production and delivery numbers, and them as well kind of reiterating their year-end targets. So again, analysts really do like them as well, even looking at a lot of their metrics behind the scenes for earnings per share and revenue. As of late, analysts have been somewhat optimistic on them. So I think overall, I think that's a good thing, but still, like coming from an investor standpoint, it is very, very unfortunate because you do believe in a stock, but just sometimes the price doesn't really correlate with what is happening operationally or just what you believe. And I feel like Rivian has been one of those ones. Like, I've been covering Rivian for a good while now, and even when it did previously dip to $12, I was saying, hey, look, they have more cash than the share price. Like, this is a screaming buying opportunity. I think after a couple of analyst ratings and just some good news from Rivian, the market finally realized that Rivian was a very big contender in the EV market. So it ran up to, I think it was $20 something. But now just the fear is setting back in. Fed's, what they recently said yesterday about potentially no rate cuts, that is just, I think, spooking a lot of the market. And like I said, just the whole EV sector is very difficult associated to just big OEMs not being able to make a profit. And so they don't find it advantageous to even deal in that sector. So I think Rivian, Lucid, that a lot of stocks that are kind of too far in, but yet not at a profit, they are getting pounded by the broader market. So all in all, I think Rivian is a very interesting play. If you do have a long-term time horizon, don't really care about volatility, then yeah, take advantage of these prices. But I feel like the fear has been fully ingrained in the EV sector, and I do feel that there is more downside coming. Despite me recently buying, I think I bought in at 1036, something like that, because that was a crazy sell-off that did happen. I think that was due to Tesla and their numbers. But like I said, I do feel like there is a lot more downside coming in the short term. So even more reason, if you guys do know options, then you can definitely sell puts, sell covered calls. That's what I've been doing, especially on any stock that is extremely volatile, such as Rivian. You can make some pretty good money just based off of the premium. So if you guys don't know options, highly suggest in researching them. But getting back into some of the data points, right now with about 15 minutes left in the trading day, 376,000 shares are being increased by shorts. 18.13% of the free float is being shorted. So very, very close to all-time high short interest. And I believe right here 18.55 is the high currently at, or it was done on February the 27th. So very close. And so no doubtably, if things go and continue as the status quo, then you will see short interest or an all-time high short interest being done probably next week. My own opinion, of course, but 125.19 million shares overall are being shorted. As a dollar value, that works out to be $1.26 billion. Cost to borrow average is 0.99%, and then utilization is 60.98%. So as I've said in the past, I'm just bringing this up as a benchmark. Definitely do not feel that, I guess, Rivian is a squeeze play, because it's not. A lot of the fundamentals just do not really jive with that. But by analyzing this information, by Rivian being red and them increasing, it does validate the downtrend and potentially does insinuate more downside is coming. Looking right here at options though, so $4.29 million in calls being purchased versus 2.41 in puts. Sentiment wise, very much evenly divided between calls and puts, but 42% of all the options being done today are bullish. And so of course that does mean upside in some cases. Of course, shorts hedging, that could be attributing to some, but of the call options that are being purchased, there's a consensus for it to be back above around 11 or 10.50 to $11 by the end of next week. And then looking at puts, you do see a consensus for it to be sub $10. So the risk versus reward does insinuate, based off of this information, that today and this price point that we're at right now is a overreaction and it should be going up. But then again, as what we've seen in the past, sometimes that doesn't amount to jack all. Moving on though, looking at this, so these are some of the transactions that have occurred on the dark pool. So dark pool is linked to larger institutions as well as shorting. So again, just so you guys are kind of getting a good viewpoint of everything. I know I'm going through this relatively fast, so you can always pause the video and just kind of go through it at your leisure, but as you can kind of see, there is quite a lot of transactions being done on that exchange. But moving on, looking right here with it, currently at $10.07, it did bounce off of that psychological $10 mark. So that's a good support level. Whether that does hold or not, we'll just have to wait and see. But if it does not hold, then it will be trading between this $9.62 support and $10. But right now, 10.40 is a very strong resistance level, and in fact, it did bounce off of that as it spiked up kind of around this range. And just to give you a quick overview of the Elliott Wave technicals, I know a lot of people do really like the Elliott Wave technicals, but going over here, it does have a pivot point of 930. So for as long as Rivian is above that, which right now it is, then it is anticipated to get back into the 15s. I think that is a little bit too optimistic. Normally I've been very like the Elliott technicals have been on point, but I think that this is somewhat too optimistic. Vice versa, if it does break this 930 range, then it is anticipated to get to the 6s. So I think right now it's just feeding off of the extreme volatility that has been happening with Rivian. But unfortunately, when it comes to this downside, I actually do tend to agree with it, because if it does break this $9 mark, so that S2 that I kind of mentioned previously, then it is going to get a very deep bloodbath, despite, like I said, that kind of intrinsic value just based off the cash that they do have. Like, things are going to get very bad for Rivian, and as well the broader market and EVs and stuff like that. While I'm actually on Interactive Brokers, the fair market value from Morningstar, which was just updated, I believe it was the beginning part of last week, it does show 1787. So take that for what you will. On a side note, if you are looking for a lot of good compiled information such as analyst ratings, forecasts, or ownership, like everything under the sun, take a look at Interactive Brokers for all of this information to be completely free. So just click on the link in the description below or the comments and kind of play around. It has a lot of good information. But getting right back to it though, looking on the actual chart itself, so it is lower percentile of the Bollinger Band. Looking at stochastic, you do see it at 10, so it is considered oversold. So if there is a good piece of news that does come out, then you should see a rush of value investors, because in the past when Rivian does put out some pretty good news, like, it tends to go up. And so at least it has that on its side, so you can kind of tell some institutions are monitoring it, not necessarily getting in, but they are ready to buy if the, I guess, opportunity or the scenario is favorable. But despite that though, you do see a bearish deviation, so red line above the white. A number of retail investors haven't been doing all that much ever since it looks like March the 13th. So they've been maintaining their position, not really selling out, and so I think it's just been that institutions been the variable factor in Rivian as well as shorts. So in my opinion, I feel like right now, I know this might be crazy for me to say, but I feel like right now it isn't a good time to buy Rivian, and that it might be potentially trending down. Again, dependent on your time horizon, because if you are thinking out up until like 2030, then yeah, take advantage of these discounted prices, because like I'm sure by 2030 it'll be like 10 times this logically. But in the short term, if you're trying to catch the exact bottom, I do feel that there is more downside coming. So let me know your thoughts. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. One final thing, make sure you guys take advantage of this promo. Simply sign up for an account with Moomoo through $100 added, and they do give you 7 fractional shares of the Mag 7. So a $35 total value. So that's a pretty good return on investment considering you're throwing $100 at the account. So take advantage of this. Link in the description below and also the comments. With all that said, appreciate all of you watching.